China. China actually confirming this idea of the review of the trade deal that they had reached, at least that first sort of stage of it, will be coming at some point, even though we don't have hard details. Let's bring in Harry Broadman, former White House economic and trade official, currently the chair of emerging markets practice at Berkeley Research Group. Harry, great to have you with us. And so at least we have some overtures from China here saying, you know, we will have this review. We will have these talks at some point.
Well, don't forget the review is a requirement under the agreement, and the agreement specifies that there was to be a review 6 months from the date of effectiveness. That date has come and passed. So I don't think it should be interpreted that China has given the U.S. anything, since they're obligated to entertain that review anyway.
Harry, what is next? Because now there's different tacks in this US-China. I mean, there probably always was, but it seems like on the one hand, you know, the US is going very tough on, you know, asking China to sell parts of its companies, its US operations and so on. It's going hard on Hong Kong. And on the other hand, it's actually sort of cozying up to China a little bit. You know, what happens next?
Well, I do think the environment is actually quite cross-currenty, and I don't think, frankly, we're headed in a terribly positive direction. I think, frankly, the fact that Mr. Trump asserts that he was the one who canceled this phase 1 review is a little bit over the top. It's in his interest, in fact, to have that phase 1 agreement be completed, in the sense of trying to eliminate some of the bilateral merchandise trade deficit, which is Mr. Trump's metric for success with China. Absent that metric being fulfilled, he doesn't have much of a talking point on China. And as you point out, in fact, the talking point that he wants to flag for his reelection, that he's becoming tougher and tougher on China, and it has spilled over, as you point out, to questions about CFIUS and transactions with respect to Chinese firms operating in the United States, the breaking off of diplomatic relations in certain consulates, both in China and the U.S., where, frankly, the Chinese are not harmed very much by not having access to the Houston consulate, but U.S. firms rely quite heavily in a non-transparent country like China to be able to have access to their consulates in China. So I think there's an asymmetric battle going on here. But I think the story is one still of a lot of cross currents. I don't see things settling down anytime soon. Mr. Trump does not seem to be in a position of doing that.
It seems that when you talk about cross currents, some of the commentary I'm seeing out of White House officials, trade seems to be the only area they're willing to say that they might have something that's actually working with China. Then the litany, the long list of concerns they have heading into an election. I mean, are we going to keep seeing this jockeying back and forth? Suggestions that they want to talk, no talks?
Well, I don't know whether I think there will be this back and forth about whether there are talks or no talks, but I think clearly the White House has set a goal, both with respect to Mr. Trump and Mr. Navarro, that you can't be too tough on China. And I think this is what the card that they're going to play. Again, whether it has to do with the treatment of TikTok and, you know, who should buy TikTok. And of course, it is under U.S. law that if CFIUS, the Committee on Foreign Investment in the United States, on which I sat many years ago, does have the jurisdiction to retroactively retract a transaction if, in fact, it is found to harm the U.S. national security. CFIUS will continue to be a very prominent factor in U.S.-China relations. But I do think the one tangible thing that will resonate, I think, with Trump's base is whether or not he's able to sell more agricultural goods to China, which is under the Phase 1 agreement. So I think he can rattle the saber about foreign investment by China, and will also, you know, play into his base. But I think more importantly, he's got to show that he can put some numbers on the board in conducting transactions that reduces the bilateral trade deficit with China, which is, I think, the way Mr. Trump sees the world, in a bilateral lens. And the more that he can say that he was responsible for selling more U.S. goods to China, you know, he comes out, in his view, as a winner. But I think that's easier said than done, to be honest.
Is it fair to say, Harry, that China really has kept all of its promises? And is there any sort of reason to be skeptical that China will do anything outside the lines as long as we keep talking? I mean, has China done anything that the US was not expecting?
No, I don't think so. And I think actually if you look at the numbers of what the amount of purchases in dollar terms that the Chinese have completed under the Phase 1 agreement, it's close to maybe 30%, maybe 40%, depending on the category of what should have transpired at this juncture. And, to be able to reach the deadline numbers by the end of the year, I think is going to be quite fanciful. And I'll tell you, the real problem here is that the way the agreement was structured, it was structured in dollar terms. And so China, would have to accomplish $200 billion worth of transactions. Well, the problem is that when you set an agreement in dollar terms and then the price of the commodities drop, as they have during the pandemic and the accompanying recession, that means in order to make up that dollar volume, China has to buy even more volume, physical volume, than they were prepared to do when the agreement was signed. And so I think China really is in a pickle about having to buy more than it thought it was going to. Of course, it was naive to think that prices would remain the same. On the other hand, one should point out that China, as many of your viewers know, is in the midst of a flood. Most of the central part of the country is flooding. There is an agricultural shortage. The hog industry suffered from a swine flu that really made their demand, China's farmers' demand for corn greatly increase. And so they are very much now willing to buy some of these commodities under the deal because it serves their own interest, irrespective of the trade agreement.